Everybody, Dave Hathaway, Hathaway Property Management. I want to do a quick resource video for those of you that are business owners or might need some help with your accounting processes. And what I have on my screen right now is Profitfirst. This is the business model. This is the accounting model that we use basically to track our profits and to know where we're spending money. And me as a business owner, I like simplicity, and this is the utmost simplistic way to just track your spending and your revenue and your income. So I'm gonna walk you through it. But I have on the screen the Profitfirst by Michalowicz. I'm sure I've not asked for his permission to share this, but I'm sure he'd be happy for anybody to purchase his book and to learn this system. In essence, it is your grandma's envelope system where you're basically putting all of your revenue and you put it in different envelopes in different percentages. You have to decide what that is, what those percentages are, because they're different for each business. So don't just cut, copy, paste my stuff, because my stuff as a real estate investor is different than maybe your stuff as a retail business owner or some other type of business. So you have to do your percentages according to your business type and your sector. So with that being said, let me go over to our spreadsheet. So I kind of just made a basic version of how this works and how we track it in our business. This is semi-duplicated spreadsheet. I didn't want to put all my numbers for the last 2.5 years is I think how long we've been doing Profitfirst. But in essence, you are going to create TAPs. I don't know what the exact acronym stands for. I apologize. I should have looked it up. It's targets, but it's basically your target numbers that you're trying to get to that you think is like if your business is run perfectly. And each one of these, so there's 5 different things, and you're going to have 5 different, doesn't necessarily need to be bank accounts, but it needs to be, under the same bank account, 5 different either checking, savings. So you have 5 checking accounts under your business. Mike Michalowicz, the author, tries to get you to have a separate bank account for taxes because he wants you just forget about that money, that once it comes in, you want to just forget about it and sitting there waiting to pay, because in essence, it's borrowed money. You're going to be paying it anyways. But in essence, these are close to the TAPs for my business. My business is not bringing in $100,000 in revenue a month, but I use this number to round off and make it easy. So once you've created these different bank accounts, and I do have my taxes I have that in a separate bank account, so I don't see it on my normal day-to-day stuff. So it just sits there and it builds up. And that's been great the past 2 years. I pay my taxes early, so I get a discount, and they're just sitting there. Yes, I know it is annoying that you just have multiple thousands of dollars just sitting in an account doing nothing, but they're going to the government regardless. So that's been super helpful. So, and for the other ones, once you have all your revenue that comes in, and how I do it, I bank with Navy Federal Credit Union. I also bank with a few other banks, Capital One being one, but Navy Federal is super easy. I go back, I just check all of my revenue that came in for that month, and I do it on a certain day, and I will add all of that revenue up. And let's say that revenue is $50,000. That goes into your all revenue account. So if you have a checking account, I actually name it on Navy Federal revenue. And I put all my revenue. If anything comes in, it goes into the revenue account. And then on one day a month, I separate it out to all the other checking accounts or savings accounts that it needs to go to. So I have an operating expense for my business. And you can see I just have 68%. So that for $50,000, that's 34. So $34,000 would go to my OpEx for profit for, this is where you're growing your business. You're reinvesting back into your business. Of that $50,000, if you're at 12%, it would be $6K. The owners pay, and he goes into a little bit in depth. But in essence, you should, even if you are spending money from your business account as your own, you should, in essence, act like you are on salary. And if you were to replace yourself as COO, CEO, operator, whatever you're going to replace, whatever you want to call yourself, president, how much would you pay a person that would replace you? What would that look like? So in this spreadsheet, I have paying myself 9% of my total revenue, and it goes here. And you create a salary. So in essence, for Hathaway Property Management, I actually only pay myself $4,000 right now a month. I could pay myself a decent amount more, but I don't need it. And I choose more to put more into the profit side of the business for investments and assets. So, you'll know that your owner's account will start building up. So I have a ton of money that's sitting there in my owner's account, and in Profitfirst, they talk about that you can basically do a cash out at the end of the year. So once a year you do a cash out. And I'm sorry if I'm getting a little bit too nitty gritty. I want to kind of just hit the basics. But you pay yourself whatever your salary is. So if you have a salary of $48,000 a year, you're going to be paying yourself $4,000 a month. So even though if you get a higher revenue that month and you get $4,500, your account would just build up, and you can give yourself a bonus, or you can do an end of the year thing. And maybe some months you'll only make $20,000 revenue. So this will be less, and you might have to recover from those months. But by using this, you'll be able to see where you're spending money. If you're all of a sudden getting really heavy into spending expenses, if you need to basically say, hey, I'm not taking a profit this month, that can be a choice if you have too many capital expenditures. And then taxes down there, which I have for 13%. And that, like Mike Michalowicz recommends, put it into an account that you don't see on a daily basis, that you have to log in separately. And then it just sits there and you pay it out when taxes are due at the end of the year. Or for my case, it's property taxes as well. So, I think I hit everything here. Another thing that I do that I don't have on this is I actually have an automatic calculator right here that I will just put in whatever my total revenue, and it automatically has these percentages. So I don't have to put in a calculator and do it. It saves time, efficiency, and then I can just automatically transfer everything. And the last thing, if you start getting a little bit more advanced, I didn't want to do it on here because it's more complicated. I actually have I have profit for the business, and then I added a column to this for our Vanguard investment fund. So if you want to put some funds into an index fund or something like that, that's sitting there. So I have an extra column here, and whatever money that comes out to, I actually transfer over to our Vanguard business account into a couple different index funds that I like and that are extremely passive, but I can still use that money. So I consider it a branch of the profit, but just so it's defined each month as a percentage. So hopefully that helped you guys. If you have any questions, definitely reach out to me. I'm here to help. This is just a free resource that I wanted to film so people would know how to use Profitfirst in their own business. So hope that helps, guys. Have a great day.